Basically, brother, start by telling me current trading history, where you're currently at, how long you've been trading for, how performance is currently looking. Give me as much detail as possible, please.
Okay, so backstory. I've been trading for about, we'll say around 2 years.
Yeah.
Um, Originally when I got into trading, it was obviously mainly what I've been seeing online. I've been in university. I realized I didn't want to work a job, I wanted to do it myself, kind of go down this path. Um, I made the mistake of just seeing something on Instagram and just immediately, yep, I'm going to join that Telegram group. I'm going to join that. I'm going to try this. I'm going to do these signals. And for a while, it was going well. It was working. And then it just didn't one day. Um, I've probably been through about six different chats, six different premium groups. I've gone through like six, seven different like trading accounts, like in terms of like different brokers, losing money left, right, and center.
Yeah.
So I've tried everything, bots, signals, people teaching stuff. But they've all been, now I'm looking back on it, all like scalping stuff.
Yeah.
So in terms of trading, yeah, I've had periods of it going well, periods of it haven't. But to be honest, none of it's really been my work until as of recently, where I've like kind of stopped trading just to learn before I start again, if that makes sense.
Yeah.
So this year I had a what do you call it? I had a funded account. I was in a group. I wasn't really trading the signals that were in there because that's when I started to realize that I'm not really happy with what I'm really seeing, and that it's not really legitimate. It seemed quite fake to me. So yeah, I had a funded account. I took it really slowly. I ended up blowing the account. Um, and then I didn't trade for the month of Ramadan. I just learned. I think I reached out to you during that. And since then, yeah, I've pretty much just been on the sidelines, just looking at the markets, trying to learn a new strategy. Obviously, I said I'm going to join your group. Come in, well, today actually. I've completely forgot to join because of this meeting. But going forward, I'm just trying to take it a lot slower because I've lost a lot of money. And with all the things going on in my life, work, uni, I'm trying to find a good balance in terms of
Mm.
time and all that sort of stuff.
Mm.
Um, yeah, I think
Yeah,
that's
no,
yeah.
and it's like most people's stories. Those first sort of 18 months or 2 years is just everyone's naive at that stage. So you go down the wrong route, don't you? You go for those more instant gratification options, your signals, your bots. But yeah, I'm pleased to hear now, Daniel, you're realizing actually no, I need to double down on education first, double down on understanding, finding something that because I'm biased, of course. What works for me, but you've got to find obviously what suits your risk appetite, what suits your personality. I'm assuming scalping's not that for you.
Well, it gave me that instant gratification of being in and out instantly. But when I've been sitting looking back at it, I've been thinking I don't really feel like calling myself a trader doing that type of thing. There wasn't a lot of structure behind it. There wasn't a lot of, information behind the trades, the plan, the executions. So I've realized that I'd rather not do that again. I'd rather, be in a long term.
No, mate, I totally agree with that. Definitely. So, where now you've started doubling down on education, that sort of things. How are you structuring things as we speak? What are you looking for? Break down what you're currently doing in terms of the system.
The training system.
Yep.
Yeah, so now obviously start down from a higher time frame, weekly, daily, well, weekly, monthly, daily, 4 hour. I don't really go on the 1 hour just to get a closer picture of what entries would look like on them. Obviously, I haven't been taking them, I've just been looking at the minute. So obviously I'll be looking for them all to be in sync. I'm trying to study pairs. Because I don't know what pairs to trade. Obviously, there's loads of pairs, so I'm trying to find my kind of go-to pairs that I see the setups more often. Yeah, so I'm looking for all of those to be in sync, or most of them to be in sync. I'm looking for either the previous leg, bullish or bearish, fibbing it, waiting for a retracement into an area, dropping to a lower time frame, seeing what's happening, if we're slowing down, if I'm seeing any candle patterns, for entry criterias. Obviously, it needs to align with the POI that I would have marked out, either around psych, an area of interest, a support, or resistance, or whatever that may be, and then enter off of that. The thing I struggle with the most is sitting on my hands and just
Mm.
letting it play out. So normally when I'm in these day trade positions, if you want to call them, as soon as I see it not going well, I'll just prematurely exit or prematurely, get out of the trade without letting it hit targets or losses. So I feel like with this, because it's like 4 hours on the 4 hour chart, every 4 hours I need to wait, it's easier to like just let it play and do its thing. Yeah, it's easier to be hands off. So that's
What sort of trade range are your trades pip wise? What I know it'll vary per trade, but roughly how sort of how many pips roughly are most trades in terms of range wise? Are
to be
they
honest, um, I've stopped myself from thinking about pips too much and more on the risk to reward. Um,
music to my ears? Good.
I feel like obviously because I've been in so many groups, all I was seeing in these groups are 300 pip trade. We've made 1,000 pips this week. We made this many pips, but it's never been the risk to reward on the trades have always been negative or tiny, tiny risk to reward. So to me, I just don't like the thinking of I made this many pips. It's more
Yeah.
about the risk to reward for me. So obviously in what I've been studying, I've tried to keep it at 1 to 3 minimum. Sometimes more, but never normally less.
And I'm biased as I know. I know. I'm assuming you've watched a decent amount of stuff. And it's one of those where I know multiple things will work and multiple approaches, but I can only speak on behalf, obviously, what's worked for myself. And I really do think you can't go wrong having that minimum risk reward of a 1 to 3 because it helps in so many facets of your trading. So, so when you have your natural losses, you're going to be okay still, in terms of those winning trades being that minimum 3%. It helps so much more of the psyche. And as you said, 1 to 3 trades, bigger trade range, they allow for then scaling in. There's just a lot more in terms of positives and in terms of that come with that type of style. Hence why, yeah, I'll never waver from it. Yeah, okay. So, do you have any examples of current trades that you've currently had, losers, winners? If you could share your screen or something like that.
Yeah, yeah, absolutely. So they all would have been
See what you're
trades.
looking at.
Yeah, so they all would have been trades before, uh, um, like just before Ramadan. Obviously when I was doing this scalping type of thing. I'll share my screen.
Hey, here we go.
Is it
Perfect.
working?
Yeah, all good. I can see it on Aussie dollar.
Yeah. Okay. I'll pull up a trade.
Brilliant, let's do it.
Let's see. It's so funny looking back because obviously I don't. This isn't what I look for anymore. So when I look at the trade I'm taking, I'm like, why have I taken this trade? Like, even if it's one, like, it
Yeah.
doesn't make sense why I've
I always
took
say
that.
there's good winners and bad winners and good losers and bad losers and obviously we want good losers and good winners the whole time.
Mm-hmm. So let's do
I'll
it.
tell you what, Daniel, because like I said, as you said earlier, that's your older model now. What we can do is go back to, do you trade a lot of US dollar JPY then?
I trade a lot of this and GJ mainly. I've got my little thing here.
So let's stay on US dollar JPY. It's good volume, one of the majors. And if you go down, so you were saying earlier about the higher time frames and how you're doing it. Let's go. If we go back to a random bit of data and break it down to me, how you would now look at a chart, an empty naked chart.
Okay. Let me just go into a higher time frame. Uh,
Start
uh,
on monthly.
Chart on the monthly.
Is that an indicator? I'm assuming with all the sessions.
This is yeah, yeah. So this was a it's the scalping type of thing to help, but I'll take it off. It'll be easier. There you go.
Perfect. Good. And
Right.
if we go on replay, and let's just go back to, I don't know, in the last few years, something like that.
Okay, hang on. Where are we? Replay.
Just go keep it in keep it in like 2018, 15, 2015 onwards, just so you'll be able to drop down to lower time frames.
Let's say, yeah.
Oh, yeah, grand. Yeah, perfect. Cool. So if we zoom in on there, so break it down to me at the moment, just so I can understand your thought process, decision making, how you view things. So right now, you said you start from top, monthly top down. Talk me through. So we'll go monthly, weekly, daily, and just talk for me through your reasoning, and I'll interject different points if there's any advice I'd give.
Okay, yeah. So immediately I would say monthly we're bullish.
Okay.
Um, Obviously I know we're not meant to look too far behind, but even recently we have a leg. Uh, I wouldn't even say actually that closed up above.
Don't overcomplicate it.
Yeah. Okay. Well, I'll say we've yeah. Well, I'll say we're currently in a pullback. Looking to make a swing higher. So I would look at this and say we're bullish.
Okay. I always say to put on the monthly, be aware of it. But obviously, one worth, as you know, one candle worth on the monthly is 30, 31 days worth.
Mhm.
Well, not even that because of the weekends, but you know what I mean?
Yeah.
So if there's going to be a trend change, obviously you're not on the monthly, you're not going to know about it obviously till the end of the month. So I say be aware of it. It's helpful to know. But actually, what's more important, as you've already mentioned, is weekly, daily, and 4 hour. So let's pop onto the weekly. Okay. Talk to me. What are you seeing?
Again on the weekly, just looking at this last leg where this is a bullish leg. We've had a pullback. And I assume we are looking for a move higher. Um,
Are you sure we're bear? Are you sure we're bullish?
yeah, actually, I'm looking. This is yes, yeah, yeah. So hang on, I'll do this. So this bearish leg's knocked out a lot of price action. I'd say this is putting a lower low, lower high,
Yeah.
and then going for a lower low potentially. So the monthly bullish, weekly bearish.
Yeah, the weekly for me is bearish because if that most recent bearish leg we've seen is still the current leg, we've not put in a new lower low yet, or we've not obviously broken above it and put in a first higher high, turning us bullish. So well corrected, we are bearish. And if you just fib that most recent weekly leg for me, sometimes if you're ever a little bit confused, you're a little bit stuck, or you're working out which leg is the most recent. No, no, no. So the bigger leg before it, that's
Yeah.
it. If you just fib that most recent leg, see, this is exactly why. 786 has been broken there. So although it's cause for concern, we haven't put in any new higher highs yet. So the weekly is still bearish, but because it's broken above that 786, it would just be cause for concern for me. Okay. Or just to be aware of again. But if you delete that fib for me, Daniel, can you just, there's one other caveat I would say on this. If you look at the penultimate weekly candle, that bigger red one that we've just had, no. So where price is currently at, yeah. Obviously, the colors are irrelevant. It's more about size of candle, volume, etc., etc. I know some people prefer black and blue candles or whatever it is. If you look at that last weekly candle, you can obviously see that shows a lot of intent in terms of a lot of potential intent of where it might go. So it's just something to be aware of.
Yeah.
But again, there's lots of times where trades won't be ready, they won't be optimal, and it's just working out where are we within, like you said, weekly, daily, 4 hour. Cool. So bearish on the weekly so far, but cause for concern potentially.
Yes. I'll drop down to the daily.
Yep. Thoughts?
Daily again, I would say we're bearish. This recent legs broke structure here.
The most recent leg for me, so I can understand where you think it's from and to. Good man. Perfect. Good. Good. Okay. Good. So yeah, agreed. We're in a nice bearish leg at the moment. Okay. So still technically in sync with the weekly. Okay. Good. Now if you just delete that fib for me, now that we know sort of where those levels are aligning, is there anything else you would say on the daily? Is there anything else you'd want to know or want to comment on, or what would you typically look at still on the daily, or is that it, would you say?
Um, Let me think. On the daily, well, on this daily, I w wouldn't have anything else to say. I would question. I'd be on my hands a little bit. I don't know. Obviously, I would count this little bullish daily candle as a little mini pullback, which it looks like we've touched. But obviously, this is still going on. So, if we would break this, I would assume we've broken structure.
Yeah.
Um, so then that would like make me kind of sit and wait to see how that plays out.
I just feel peace of mind. I wouldn't class that little pullback you just mentioned. I wouldn't class that as daily structure. I
Oh,
would class the prior. So yeah, because like you said, where you've just fibbed from, imagine that because it is one whole leg, that is your whole leg. Okay.
okay.
So although there's obviously a mini pullbacks within that, it's never a deep enough pullback to class as a pullback. So I would just count that as one whole leg. Now you can see around 11100, nice round psych number, where that prior bullish structure has been broken, which we're approaching as we speak. So
Yeah.
higher for me, just highlight over that prior bullish daily structure.
111, did you say?
11100, you go left for me.
Yeah. About yeah.
Well, go right, go right. Just the most recent, the
Oh
structure
yeah.
that was broken. Nope, to the right again. Yeah, all of that region there. So that's your price. That was obviously the higher low of that bullish leg, and then obviously we saw a break of structure on the daily, turning us bearish. So if you can draw a little box off if you want, just across, just so we can see where we're at, if you wanted to. Okay, so we're now approaching that a retest of that prior broken structure. So it's a good area for a lower high, obviously area of interest. We've got some fib levels in there. We've got 11100 in there. And again, just try and focus on purely structure and price and not, again, the colors of the candles. So we're actually potentially entering an area of interest here on the daily. We know we're still technically bearish on the weekly, although there's obviously a little bit of course concern. What's the 4 hour saying?
Let's check the 4 hour.
Let's have a look. Cool. Right, Dan, talk to me about in terms of what you look for in terms of entry criteria. How does your current model look?
Okay, so in terms of a model, I would normally myself fib off the 4 hours. In terms of actually getting like a trade to execute, I would be on that 1 hour. Um, Here I can see bearish, pullback, bearish.
Are
That's
we bullish or bearish on the 4 hour right now?
right now. I'd say we're still bearish.
Are we?
Actually, no, I'm looking too far behind. I'm looking too far behind.
So show me at what point we were still bearish on the 4 hour.
So we're bearish here,
Yep. Pull
pullback,
back. Yep.
bearish here,
When did we turn bullish?
around. I would have said around here after this big move here.
Yes, yes. So when we initially just had a pullback and then we failed to put in a new lower low where that yes it we failed to put in a new lower low and then that next 4 hour candle breaking above is what turned us bullish. Yeah, good.
Yeah.
Obviously we've now had a higher high, higher low, and we're currently at the most recent higher high. Now it's just important to be aware of because a lot of the time, if it's a daily and a weekly pullback, which we know we're currently within because we're bearish, the 4 hour a lot of the time will be the opposite direction because it's allowing price to have a pullback. So
Okay.
people always say, what if the 4 hours out of sync with the daily and the week? I say it's not the end of the world, but you need to make sure you're very hot on entry criteria. You need to make sure you see enough on the 1 hour/4 hour to have your entry. Okay. Now, an ideal world, if the 4 hours bearish as well, then even better. Is it just that next confluence, which is great. Okay. So talk to me now about entry criteria. How would this look for you? What
Um.
now? What
Yeah.
time frames? Yeah. Give me how you currently look.
Okay. Well, so right now, let me just see if I remember correctly. So monthly we were bullish, weekly bearish, daily bearish,
Yep.
and now on the 4 hour bullish.
Yep.
So I wouldn't be super confident in looking to take a trade on this right now. I'd want at least three of them to be in sync.
I'm,
Um,
I'm smiling because that's music to my ears. Well done.
I haven't actually seen where the monthly and the 4 hours in line and the weekly and the daily are in line, and they're on opposite ends. So right now, I wouldn't actually know how to approach this. I would think I would wait for maybe the 4 hour to turn bearish, and then wait for a pullback off that. Other than that, I wouldn't really know what to do.
No, but this is the brilliant of this exercise, because it's now going to, like I said, it will give you the sort of the way to navigate this. So if you just drop onto the 1 hour for me, is it going to allow us to see the 1 hour? Yes, brilliant. So if I say, I know you're not a fan of this anyway, but would you take a short right now of how the 1 hour looks?
Yeah.
You would?
Yeah. Like off like what I used to trade, yeah, I would.
Oh, off what you, fine. Because for me right now, I'd still be thinking, that is not clean, that's choppy. What we
Yeah.
want to see is we want to see bearish swinging price action. We want to see the price and the market actually agrees with you and your area of interest. We're not getting right that. Yes, it might be building a bit of a range here, a bit of a top, lots of wicking as we can see, but we still haven't seen intent in either direction yet. Okay, so it's a little bit, as you said, a little bit premature, a little bit, a bit more sitting on hands is needed. So let's go back to the 4 hour. Well, let's stay on the 1 hour for me, actually. And just let's let price play candle by candle. Okay, if you pause that again for me and go to the button next to it, no, to the right, and just click that once at a time. That will print one candle at a time. Good, and keep good. So can you see why we would want to be sat on hands still?
Yeah.
Because you would now have got smokes, and you might be in drawdown, or you might have hit a stop loss, depending obviously on that side of things. But you can see how we're not interested. So good call to be patient, because as you said, the 4 hours out of sync, 1 hour wasn't really giving you much yet. So it always pays to be patient. So if we pop back onto the 4 hour now, I'll ask the question, but I'm assuming you wouldn't like that in terms of short.
Yeah, no. No.
No. And if we just pop back onto the daily, so we keep reminding ourselves where we're at within price and structure. So at this point in time, I'd be saying, right, we still need to be sat on hands. There's been no optimal entry. There's been no synchronicity yet between all of those time frames. So at this point, I'd be saying to you, Daniel, if this was live, I'd be saying, sit on your hands, wait for the daily close, see where that daily close ends up. Because if where price is currently at in the daily, if that ends up just being one big wick and the body's much lower, then it gives us more confidence that brilliant, we're respecting this lower high area of interest, and we might now melt off. Okay, so if you keep clicking through for me, so we see how the daily closes. Okay. Okay. Talk to me now. What's happened? Just a few pause there. What have we done? Very subtly, but what have we done? Attention's in the detail on the daily.
I don't see it.
So if you just delete the area of interest for me, just so you keep things cleaner. Have we turned bearish? Sorry, have we turned bullish on the daily?
No.
If you get your horizontal tool out, the on the left behind the no, so go to the one, that's it, one above the fib, good, and go on the arrows, good, and go down to horizontal ray, good, and click just on the previous lower high of that before that big daily sell-off.
What, down here?
No, before the lower high, go to the left at the top of the biggest move, up, that body, not the wick, the body. There, perfect. Just draw a line there for me. Right, zoom in on that prior green, that candle at the peak. Can you see how we have subtly body closed above?
Okay, yeah.
Ignore the wicks. When it comes to breaks of structure, you are interested in body closing, not wicks, okay? Because again, same principle with fibs. If you could have a lot of wicking past the 786, but the body closes around it, that's still respecting. It's where the body closes. And obviously 4 hour daily is obviously a hell of a lot more trustworthy than those lower time frames. So at this point here, I would be saying, well, we're definitely not interested in shorts anymore unless we see a hell of a lot more price now play out. And can you see how it was just pays on that, as we said earlier at the weekly, where we saw it break the 786?
Hmm.
It's just little details like that, but are hugely important to say, actually, we need to have caution, cause for concern, you did take an entry, and it was for the right reasons in the end. Because as we can see now, the daily's actually flipped. The daily's turned bullish. And some people might look at that still and think, has it? Because some people only look at the last 1, 2, 3 candles because they're more intraday or day traders. And I say they get caught out so many times. Okay, you've got to look at the whole leg and where we are. Does that make sense?
Yeah, yeah, definitely.
So at this point now, if you clean that chart back up for me, so we are now bullish on the daily.
Hmm.
Go on to the weekly for me. What's happened on the weekly? Are we still bearish or are we now flipping? Let's see. Right, we look like that candle hasn't closed yet, but if it does close where it currently is at, as you can tell, that's now put in a higher high and
Yeah.
is officially bullish, which we were considering anyway. So if you click one more candle through on the weekly, let's just see where it actually closes. Oh, and again, and again, until we get the next candle. Right, so we've officially now turned bullish because that body close has closed above. Can you see what I mean?
Yeah, 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 yeah.
To those 4 or 5 candles to the left of it. Okay. Yeah, yeah. That's still a lower high at that point. But now that we've seen that candle just happen and close, although it's a subtle high, it's still a new higher high. Okay. So attention's in the detail. Okay, cool. So weekly is now bullish.
Hmm.
Daily is now bullish. And if
Hmm.
we pop onto the 4 hour, what's the 4 hour doing as we speak? All right, Daniel, talk to me. What's the 4 hour?
We're bullish.
Brilliant. So what have we now got? What's it?
Well, they're all in sync.
Beautiful,
So now we
beautiful,
can go for
beautiful,
entries.
beautiful. Now, if you fib that one whole 4 hour leg, it's a big old leg, but it's one leg, one whole leg nonetheless. Okay, cool. So right now, would you be interested in pulling the trigger on longs right now where we are
No,
at?
no, no, no,
Why
no.
not? Why not?
I'd be waiting for the pullback before looking for a higher high to be put in.
Good. Because when we're bullish, we're only interested in taking longs from a higher low. Okay. Because the risk to reward's much better. There'll be a lot more confluence around there. So good, 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 cool. So, because lots of people will see this and think, right, I'm jumping in. We're really bullish. And I say, well, your risk to reward to start with, where would you put your stop to allow it to breathe still? So good. Let's let this play out. Okay. So candle by candle. And let's see if you even get a pullback, because you might not, and price might leave without us. And if it does, it is what it is. Okay. Keep going for me. Good. Right, we've now turned bearish on the 4 hour. Okay. And keep going for me. Let's see. Keep clicking through. Okay. Pause there for me. Okay. And if we just see where we're at on the daily again, there's still been no entry because we still haven't had a pullback.
Yeah.
Still nothing. You can see why being patient and sitting on hands is a hugely important skill.
Mm-hmm. It wants to do it.
Load.
There you go.
Cool. So if you so as that daily come into the 38.2 at least, if you just extend your fib slightly higher, just that 0% needs pulling slightly higher. No, to the wick. Yeah, perfect. So yes, that has come into 38.2. So we can count that as although a very shallow pullback, it has pulled back and it's an official higher low. So if we delete that fib now, we still know we're bullish. Let's go back onto the 4 hour. Okay, now it's a case of waiting for the 4 hour to turn bullish again. I think it may have from what we just saw a second ago. Let's just triple check.
Yeah.
Okay, so the 4 hour at the moment, we are bullish because and some people might look at this and say we are bearish. We're not. So highlight where we turn bullish with that break above again, that green candle with no wick on the top. There. Okay. We were bearish, and then that candle closed there to turn as bullish again. Now, the candle that follows obviously engulfs, but at that point, that's just a higher low within that 4 hour new bullish leg. Are you with me still?
Yeah. Okay. Yeah. Yeah.
If we don't break below where your cursor is, that higher low, then we are still bullish. We've had some wicks into it, but again, the body closes have still respected that higher low. Okay. So I ask you now, Daniel, would you be interested in longs as we speak, or would you want to see more?
Um,
And I know you're only a couple of years in, so I know I'm asking a decent amount of you here in terms of decision making, but
that's good.
you,
Yeah,
you're
I
in.
would say yeah.
Did you hear the tone of your voice then? You sort of, yeah, there's indecision, isn't there? Listen to your intuition. Okay. I would want to see a little bit more price. Okay. So I would wait for the next 4 hour close. So let's see what happens. Just the next close. Okay. Oh, you went one too many. Go back for me.
Uh,
Click the arrow next to select bar. The arrow. That's it. And click select bar. Good. Click that again. Good. And just get rid of that most recent candle. Just hover over it.
oh, okay.
Yeah,
I'll do
just get
that.
rid of that. Because I only wanted to see the next 1 hour candle. It's annoying that candle's printed. Because what I was getting at there before that candle printed is that you've seen, can you see if you'd maybe entered when you were umming and ahhing, you may have got stopped
Yeah, but it's work.
within that 4 hour of price because you're a little bit premature. But can you see by just being a bit more patient, it's exhausted and probably cleared out a lot of buy orders and then look at the body close. It's brilliant. Okay. So drop onto the 1 hour for me now. Now that you've seen that 4 hour candle print, it's annoying that it showed the next candle now,
Yeah, it's a huge one.
but you get what I mean.
Yeah, 100%.
Cool. So the 1 hour was bearish, but now again, you can see from that 1 hour high, we've now turned bullish again. So one at a time, just one at a time, one candle. I would now be considering, because of that 4 hour close, I'd now be considering an entry if it gives us one. Keep clicking, just one at a time. Right. So annoyingly, no entry presented. Because basically, I'd be looking for when that 1 hour turned bullish again, I'd be looking for a pullback on that, which never happened. A pullback, maybe even if it was only halfway down again. And then looking for longs, of course. Okay. And we could have stops below that 1 hour lower low before we turn bullish. Okay. And as you can see, then price would have played out. All time frames were in sync. And that's the importance of obviously having the weekly, daily, and 4 hour in sync because you are way less likely to get caught out against the trend. It's then, if you can get them all in sync as we've done and we've patiently waited for, it's then simply a case of seeing if the market gives us a proper entry, a proper higher low area of interest, if we're bullish, of course, or obviously lower high if we're bearish. Does that make sense?
Yeah, yeah.
So out of interest, keep letting this play, but that's a stinky 1 hour candle. But it'd be good if you're in the trade. Keep going for me. Good. Keep it going. Right. Okay. Keep going. If it comes lower, there may be a potential entry, but only if it comes lower. Keep going. Okay, pause there for me. Pause there, pause there, pause there. Okay, you've seen this at this point now. This is a higher low area of interest within 1 hour leg. Would you be interested in a long here?
To be honest, no, I wouldn't.
Why not? Not saying you're wrong, but why not?
Because if we were still bullish on the hourly, I would have expected this to be the lower high, but we've broken that.
What would the 1 hour typically have to do to allow the 4 hour to have a pullback? The 1 hour will typically break trend to allow the pullback to happen. Yeah. So
Okay,
don't remember the 1 hour, the 30 minute. A lot of intraday traders call that the higher time frame, which is nonsense. The
okay.
1 hour, 30 minute isn't that trustworthy in terms of structure breaks, trend changes. It's helpful for entry criteria. And I agree with you. I love 1 hour entries. Don't get me wrong. But in terms of the other stuff, I find it fairly useless unless we're scaling it. So if we pop onto the 4 hour right now, where do we currently look like? Because this could be a really nice area of interest. If it loads.
Yeah, laptop's on its last legs.
Don't worry, man. Don't worry. Because again, that wick on that 1 hour candle as we speak again shows us that there's buying intent. Brilliant. So that's a 4 hour, lovely. If you fib that most recent 4 hour leg,
Yeah.
That'll be somewhere around the 618. Yeah, perfect. That body's around the 61.8. Perfect. So for me, Daniel, here, I wouldn't mind that. So if you set up a long position for me, just to where that body is, brilliant. Okay. We'd need to cover the 78.6, but not a huge amount. A little bit lower for me. Good, just to cover some of those that 4 hour wicking, just in case we came down to approach it again. And obviously minus 27 initially. So does the risk reward make sense? Yes, it does. It's a 3.2% return initially. And look at that pippage. That's only 62 pips. That's tiny. That's tiny. It's a tiny trade for such a big game, which is not, it's a good problem to have. It's a good thing. So if we pop back onto the 1 hour, I know it's been patient, and we've sat on hands, but it really just emphasizes these type of exercises. It really emphasizes quality over quantity, being incredibly patient. And as time and experience comes with you, Daniel, you'll really know when to just say, look, that's not worth my time, or actually that is. Okay. So out of interest, let's now let that play. Click the play button. Let's see what happens. All time frames are in sync. We've seen the 1 hour close with that nice wicking. Okay. So we've been stopped. Okay. So keep letting that play for me. Let's see what happens. Okay, so we've ended up then having a trend change structure. So again, the importance of the stop loss. We've allowed the 786 to breathe, which we did. We gave it some coverage as well as around the area to allow for obviously a base to build if it did come down. But can you now see that stop loss has taken you out because we've had a trend change, which is a good thing. That's a good place stop loss, because now if you go onto the 4 hour, I imagine we've seen a body close of some sort. Does that make sense? So if your stop loss,
Yeah.
too many people place stop loss based on a set pippage amount, which is complete and utter nonsense. You've got to place your stop, which is going to basically say you're wrong. There's a trend change that's happened. And look, we've had 2 4 hour closes below the 78.6. So that one and that one. Yeah, ignore the green candle at the end. So yeah, so that's a good looking trade. If you sent that to me and said, Philip, I got stopped out today and this was the trade and this is what I entered off, as long as I'd then go and look at it myself and say, has he done everything right? Yes, you have. That was a great trade. I don't mind that. Okay. That is a good loser. That's a great example of a losing trade. Okay. Because everything's been in sync. You've waited for the market to push a lot higher. And we saw a lovely intent to the upside with the 4 hours. So it's just one of those. It's an optimal loss. Okay. That's a good looking loss. Okay. And then it makes you in your head, it makes it a hell of a lot easier to move on from your losses, because you say, well, look, I take that trade again and again and again and again. Okay.
Okay. Yeah.
All good. Any questions, brother?
For this trade, no questions.
Sure.
Yeah, the patience is crazy. Like I'm just like probably thinking about it. Like it's crazy.
What, the patience?
Yeah, like the patience needed for like a really good execution and to get all your things in line. Like it's really it's like that's more important than the actual execution itself is waiting for the setup.
Yeah. So many people will get prematurely taken out because they just can't. And this is why I stress so much. This is why I just stress patience, discipline in all areas of your life, because it makes you so much more detached from obviously it being a winner or a loser. You can't think like that. You've obviously got to think in probabilities and think, well, if I keep taking optimal setups, it's a minimum of 1 to 3. I promise you by the end of the month and each quarter, you'll be sitting quite pretty in terms of consistency, in terms of that percentage gain. Yeah, mate, patience. But this is why so many people fail, because they just don't have the patience. They want instant gratification. They focus on monetary values instead of percentage gain or percentage loss. Yeah, and you can see how yeah. It's a savage, easy skill to get introduced into, but very difficult to make it work. So
Yeah.
patience is, yeah, well, you've summed up yourself. It's hugely important. Okay.
Hmm.
Good. Now, at this point, if we clear the chart up, you can basically see that we've had a break of structure on the 4 hour. Let's just see how the daily looks. Has that changed trend at all? Because if it has, obviously we need to be very much sitting on hands. So potentially, let's just one more candle for me just to see where that daily closes. And again for me. Yeah. So we've had a break of that higher low that came off the 38.2 earlier.
Mm-hmm.
See that we've had a daily engulfing, and it's obviously broken that body close below it. So this would be now cause for concern. This would be sitting back on hands because the daily's bearish, 4 hours bearish, and I imagine the weekly's still bullish.
Yeah.
So again, with lack of synchronicity. So the one thing I'll say here is I always say to people, you only need to focus on 1, 2, 3 pairs max. So you can really double down on those individual pairs and the corresponding index. Once you nail those with years and time and experience, then you can branch out to a slightly bigger watch list where you've got different currency pairs. So the yen, the US dollar, the pound, etc. So, and this is why my watch list now, I know you've never seen my watch list, but my watch list now is probably about 13, 14 pairs, four of which are indexes, and the rest are obviously tradable pairs. But I don't trade all of those pairs. A lot of them are in there just from purely market sentiment. But again, there's plenty of times, as you can see here, where there won't be a trade, and there won't be a trade, and there won't be a trade, and there won't be a trade. And that's why having a beauty of a slightly bigger watch list means, I still like to trade most weeks, don't get me wrong, where there's most weeks there's something at least. Okay.
Okay.
But yeah, brother, any questions at all?
Not that I can think of. Everything makes sense. I get everything. Trying to think of a question.
Don't worry if there isn't any, but not to worry. But I'm glad it all makes sense because, as you've probably seen in your first couple of years, there's a huge amount of noise online. There is a huge amount of, awful advice, awful approaches to the markets, 1 minute trading, all this sort of nonsense, and they'll eventually get whether it depends obviously what people decide to post, isn't it? They're not very transparent, but I can assure you there's minimal longevity in 1 minute trading, 5 minute trading, that side of things. It's better to stick to the higher time frames, more hands off. Higher timeframes, as you know, are more trustworthy. Conferences are more respected. Breaks of structure are more trustworthy, or confirmations of trends are more trustworthy. So I always say to you, you'll have a smoother time, a nicer time sticking to higher timeframes. And then even then with time, if you want to refine to being more of a 30-minute trader, a 1 hour trader, then so be it. But as long as you're very, very in sync with the higher timeframes and you know where you are within daily price, daily structure, daily legs, 4 hour price, 4 hour structure, then you're again way less likely to get caught out. All right.
Yeah. Actually, I have a question now that I've thought of it.
Yeah, go for it.
You know how you said where it's best to start with like 3 pairs, 2, 3 pairs, and like get really good at them.
Yeah.
Um, a question that I was gonna have was, what's so like for example, if you just take one pair, how long in your experience have you seen before a setup will appear, and like how long will it go without a setup being there? Like just in your experience from different pairs, I know it'll be different for each pair, but what would you say?
So a good place is always to start with majors, decent volume, decent movement most weeks, most days. If you're going off my sort of ruling in terms of things being in sync, weekly, daily, 4 hour, and so on and so on, you might find on just one individual pair, there might be a setup once every couple of weeks. There might be set up once a week if you're lucky, depending on whether it's a scaling trade on the 30-minute or 1 hour, or whether it's an initial entry like we've seen on today's example. I'll be honest, it depends on the pairs you've said yourself, but once every 1 to 2 weeks. So obviously the trade frequency is not huge. Yeah. So again, it tests a lot of patience, but I say quality over quantity is very much rings true in this. I quite like the US dollar pairs. Dixie, the DXY is really trustworthy in terms of an index. Quite clean as well. You're in the UK, so in terms of GU, things like that, cable with London and New York session is decent stuff like that. US dollar JPI I really, really like. Do you have the basket on your watch list? JPY basket?
Oh,
Don't. I would get it on there. It's basically the equivalent of the DXY, but for the JPY, the yen.
yeah, I've got the JPYX, but it's not let me click on it. But yeah, I've got it on here.
Fine. But again, a fantastic confluence. And again, just as a bit of a caveat here, if that DXY is not in sync with that US dollar pair, whether it's, I say we're bullish on the DXY, but we're bullish on GU. Obviously, that doesn't make sense. We'd expect GU to be bearish. The DXY is bullish. Then again, cause for concern, and I won't be interested. So yeah, man, a lot of patience is involved.
Yeah,
But hopefully that's been helpful.
it has been. Yeah, no, it has been. I haven't obviously I've done it myself, but it's never been in depth like that. So that's
I
been
always say it's information you can now at least double down on. You can double down and know that it's trustworthy, and it's going to get you a certain outcome in X amount of time. And I find in all my, it's been around now for 11 plus years. You've seen April, for example, the volatility was really challenging in terms of in the markets in general. And that's, people are complaining about it. I say it's normal. It's part of market cycles. It's cyclical. But the strategy, because again, you're trading in sync with higher timeframes, you still come out typically the other side as long as you're executing things properly and being patient still and so on and so on. It's a brilliant way of approaching the markets. It'll only
okay.
serve you well in the long run. All right.